Hey everybody, how's it going? Chris Romano here. I work for Dell Technologies. I've been in the tech industry about 30 years. For all my fellow tech employees who are routinely receiving large bonuses or have RSUs or options or any of those kind of things, I got a few strategies to generate a lot of attention and confusion online in the so-called short-term rental loophole. So Arda is going to talk to us about this short-term rental loophole where you can take advantage of your RSUs and bonuses and things like that.
My name is Arda Bircan, and I'm an investor into short-term rentals, and I built a vacation rental business from scratch in South Florida. I also own a full service real estate and tax planning consulting firm named STR Loophole. Prior to investing in short-term rentals, I worked in technology sales for almost 18 years. Actually, Chris and I used to work together. I decided to be my own boss after getting laid off back in 2020. It was pretty difficult, but I promised myself that I will create something from scratch and become my own boss. That's what still drives me today. And after doing a significant amount of due diligence and talking with successful real estate investors, it became clear that short-term rentals deliver a faster return on investment and a higher cash-on-cash return than any other type of real estate investments. Plus, the underlying assets often appreciates. It's almost impossible to get a similar number with long-term rentals, with the usual cash-on-cash rate is being around 8%. And once I realized that I could generate enough income to cover my living expenses and the massive opportunity to reduce your tax burden with short-term rentals, I decided to put all my focus and energy into investing in cash flowing short-term rental properties that put money into my pocket each month. So to give you an idea, Chris, my first short-term rental in South Florida generated around $210K gross revenue, and the net income was around $60,000 in the first year of operation. So those numbers, were impressive, right?
Yeah. If you were a company, that'd be some good return, right?
Exactly. And if I were to, purchase,
you're talking about your personal investment here, right?
Yeah. And if I were to purchase, more properties, I can increase that number. So that's kind of, little story, that I wanted to share. So let's talk about, the $1 million question, right? What is short-term rental tax loophole? Yeah. So the short-term rental tax loophole, it's a game changer for high-income professionals if done correctly, right? But before we get into that, let me say this. If you make $500K a year from your, tech job, you lose roughly $180K to taxes. Let that sink in, right?
Yeah.
Instead of paying that tax, you can buy an Airbnb to legally pay zero tax. And I know it sounds too good to be true, but most high-income professionals think writing a huge check to the IRS is just part of the job. But with the short-term rental, tax strategy, that's not the case.
Yeah.
With bonus depreciation back at 100% in 2025, which I'm going to talk about, right, what it is, the short-term rental tax strategy is even stronger for high-income tech professionals. And let me be clear, this is not tax advice, and I'm not a CPA. So, whoever is listening to this today, you should always consult with a tax advisor specializing in real estate and short-term rentals if you are interested in using this short-term rental tax strategy, right? But short-term rental loophole refers to the section of the tax code that says if average customers stay at a short-term rental for 7 days or less, then your short-term rental is not a rental activity for the purposes of the tax code. So it's treated as any other business. So ultimately, that means all you need to do is materially participate in that business for rental losses to be non-passive and offset your W-2 income. I know it sounds technical, but let's dive a little deeper. And I'm going to simplify this, right, as much as I can. So you can purchase a short-term rental property and utilize it to generate income while concurrently writing off depreciation, non-cash expenses to reduce your taxable income. So the STR tax loophole allows you to take paper losses from your rentals and use them offset your W-2 RSU income or capital gains on RSUs. You can offset your active income with passive losses that are being generated from your short-term rental business. What I mean by that, these are not cash losses, but simply tax losses. Therefore, your short-term rental business is still making money on paper. Money is hitting your bank account every month, but you get to tell the IRS you have a loss. And you are able to use that loss to offset your high earning W-2 or capital gains on RSU proceeds. So there are plenty of tech professionals, doctors, surgeons that have, like very high, like earning jobs. They invest in short-term rentals and use those losses to offset their income. And they are able to do this without being a real estate profession. Couple of important things. So you have to prove that you materially participate in running your short-term rental business by fulfilling one of the, the 7 material participation tests. So the material participation test is a set of rules established by the IRS to determine whether an individual is actively involved in a business, right? So the most common and easiest material participation tests to hit for short-term rental investors are spend more than 100 hours on the activity and no other individual spends more time than you do, right? Spend more than 500 hours on the short-term rental business. It's really important to understand you do not have to be a real estate professional to leverage the short-term rental tax loophole. Real estate investing could be just your side hustle, and you still be able to use short-term rental properties to write off depreciation, like I said, non-cash expenses, to reduce your taxable income. And one more thing, let's say you have, 3 different properties, because we have clients like that, right? 2 in Arizona, another one in North Carolina, all short-term rentals, right? You can combine all your hours across your different short-term rentals to reach 100 hours. And if you are married, you can also combine your spouse's hours as well.
But if she's doing all the hours, does her hours count towards the rent? So she's taking care of all the management of the property, everything, because we're married, then her hours count towards the 100 or 500 hours.
Yeah, that's absolutely correct, right? I mean, bottom line, investing in, short-term rentals can be an incredibly effective way to save money on your taxes. And actually buying a short-term rental, expanding your earning potential by accumulating additional properties is a game plan used by high net worth individuals nationwide, right? That's what we've been seeing. But at the end of the day, I mean, this is, the short-term rental tax loophole and the technical definition of, the tax code, right?
Right.
But let's see.
Completely legal, right?
Yes, it is completely legal. As long
so
as
let me ask you about the short-term rental, because I have a question. So you said Airbnb. What's considered short-term? That Airbnb, like week, 2 weeks, month, or what if somebody rents for 6 months? Is that short-term rental?
No, that's not a short-term rental, and it's a very good question. So basically from IRS, in a perspective, the average stay must be, 7 days or less throughout the years, right? So if you are doing, monthly rentals or, long-term rentals, then, you cannot leverage the short-term rental loophole.
Right. And your average Airbnb is like a week or 10 days or
yeah.
I've never stayed in one longer than 3 days myself. So.
Yeah. Typically, we purchase larger properties for our clients, and typically, average stays are, kind of 3-4 days, right? For those, kind of properties. But, you can have, kind of more than 7-day stays, but you got to think about the average stay throughout the year, right? As long as it's less than 7 days, you are qualified and you material participate, you can leverage this, STR tax strategy.
You got tech employees investing $250,000 or $500,000 in RSUs. Why is this specific strategy value to them? What's so valuable about it, I guess, is the gist.
I mean, as you know, tech employees build wealth through RSUs, right?
Oh, yes.
in big tech, some employees are sitting on millions in vested RSUs, especially if you work for NVIDIA, Broadcom, SanDisk, etc. But with that comes a massive potential capital gains tax bill. So it's really important to understand your RSUs vest as ordinary income at the vest date price, okay? Reported on your W-2 like a cash bonus, and no way to defer it. With the stock up 20 times or even 60 times, that's what's going on with SanDisk, because we have clients there, right? Every vest is a massive ordinary income event. Employers typically withheld 22% for federal tax at vesting. So if you're in California or another high tax state, your actual rate is closer to 50%. Right. So that gap, roughly $200, like $80,000 on $1 million in RSU income that you owe at tax time that wasn't withheld. So that's a big problem, right? So, I mean, all these folks, who are, kind of making a lot of money, at these tax companies, they had financial advisors, right? And these financial advisors typically talk about three things: tax loss harvesting, max out your 401k, and use a charitable reminder trust. And none of them move the needle on a 1 million in ordinary income. So, because you are optimizing around the edges of a very large number, right? And let me, I can explain it a little. So these solutions, tax loss harvesting, max your, kind of 401k, or use a charitable reminder trust, all of them are built for capital gains problem. And you have an ordinary income problem, right? So that, short-term rental tax strategy hits, RSUs and W-2 income directly. We just, kind of explain that, right? You meet one of the material participation tests under IRS rules. You keep average guest stay at 7 days or less, and you unlock 6-figure tax savings, right? And just, kind of quantify this. $1 million short-term rental property, which is not cheap, you bought it the right way and structured it correctly, can generate, kind of 200 to 300K in paper losses in year one through, a cost segregation and 100% bonus depreciation. Those, kind of paper losses generated from short-term rentals offset your RSU and W-2 income. So you can leverage up to, 500K in losses in 2026, right? And the point that I'm trying to make, real estate is one of the most tax advantage asset classes in the entire code. And for a high earner writing 6-figure checks to the IRS, that's not a footnote. That's the whole game, if that makes sense. I'm happy to, kind of give you a real life scenario and break down, the power of, kind of short-term rental tax loophole. Would you like me to do that? Or
yeah, go for that. Yeah, definitely.
So we recently worked with a tech professional. He makes quite a bit of money. He earns, $1 million from his job, right? His high income also places him in a high tax bracket. He owns.
When you say $1 million, did that include RSUs? Or are you talking?
Yes, including RSUs.
Okay, including is variable.
That's his total, kind of comp, right?
Bonuses, RSUs, and everything. His total comp package. Got it. Just want to be clear.
He owns long-term rentals, but never bought a short-term rental before. So he reached out to us, right? Like we had multiple different conversations, and he ended up, kind of selling 300K invested RSUs, right? We helped them purchase an existing short-term rental property for $1 million. It's a turnkey property because he doesn't want to do, a lot of work, right? Because he's super tied up. Yeah. After accounting for expenses and the mortgage payment, he's cash flowing $5,000 a month, right? And by utilizing a process known as a cost segregation study and a tax incentive called bonus depreciation, we were able to significantly increase the depreciation expense on his property in the first year of operation, right? So doing a cost segregation study will allow a significant amount of depreciation to be taken in the earlier year of the study. This means that you will speed up your tax deductions and your net taxable income will go down, meaning more money in your pocket, right? So 100% bonus depreciation is now permanent for the property placed in service after January 19, 2025. When you buy $1 million property and do a cost segregation study, anywhere from 20 to 30% could be resegregated and fully depreciated. Gave our client a $300,000 deduction. So even though our client is cash flowing $5,000 per month with his short-term rental property, when you factor in the depreciation, his taxable income for the property shows a loss of $300,000. And this paper loss can offset other taxable income, which is $1 million for him. And after netting his annual salary with rental losses, he saved around, $150,000 in taxes. Let me, mention this. With higher interest rates, right, long-term rentals, multifamily, or real estate syndications offer minimal, if any, cash flow margins. You do not need to scale up to, 100 units to achieve $10,000 a month in cash flow with short-term rentals, right? But the moral of the story is our client is going to diversify money out of, stocks, and long-term rentals into tax advantage cash flowing short-term rentals. So let me put it this way. On a micro level, he take advantage of the short-term rental loophole, offset his W-2 and RSU income, and save 6 figures in taxes, right? But let me paint the big picture. On a macro level, he's going to build a passive income portfolio over the next 3 years by using this tax savings from the first deal to buy another short-term rental property, and you can see where this goes. By far the best way to legally and ethically reduce your taxes and get rich slow.
So why is it important to purchase cash flowing STR property than just buying it for the tax benefit of buying it for owning another property, I guess,
It's a great question. What I can tell you is you should never buy a short-term rental property for tax benefits. You should factor in historical appreciation, but you shouldn't bank on it. You should always look for and buy a cash flowing short-term rental property. A deal might be tax advantage, but the tax advantage should not overpower the actual economics of the deal. So if you are buying a short-term rental property just for tax benefits, I think you are going to be disappointed in the long run. And let me explain. Because you get the immediate tax benefits, but you are holding a short-term rental and it must produce cash flow, just like any other business, right? Right. If it doesn't produce, the tax savings will get eaten up quickly with your net operating loss, and your investment needs to actually produce a return. If it doesn't, you cannot move on to a second property or acquire more properties as the business is not generating income. So you cannot build a path to financial freedom, right?
As a busy tech person, how do I manage a short-term rental property? I mean, I got a full-time job. How am I going to... How am I going to get my 100 hours? Yeah.
No, that's a valid question. So with Airbnb automation software, obviously you know software better than anyone else. Yeah. You do not need to spend more than, an hour a week to manage multiple properties. So let's talk about the Airbnb automation. It's the process of streamlining the tasks that you do every day or repeatedly. Automation gives you comprehensive control over your properties, and you can become a remote host and manage a short-term rental from anywhere, set up that way. And using automation software for property management enables you to bring automation to all major areas of Airbnb rental operation, because cleaning, coordination, guest communication, digital, check-in, review, an Airbnb review request, right? Like pricing, upsell, financing, anything you can imagine. I mean, the bottom line, a busy tech professional with a fairly high, W-2 can pass material participation tests, right? Claim tax losses from his or her short-term rental and save 5 or even 6 figures in taxes without working full-time in real estate.
Yeah. I mean, I rent a lot of Airbnbs. I noticed over the years that you used to have to meet the person at the property. You don't have to do that anymore now. Everything's a key code, and you visit the properties.
Exactly.
Yeah. So how do I figure out where I'm going to put my short-term rental? How do I figure out which markets are the appropriate markets? I mean, obviously, I don't want to put it in the middle of Podunk, Arkansas, when I could have it in somewhere like Nashville, New York City, Orlando, Florida, somewhere like that. How do I figure that out?
Your investment strategy must be high level and data driven. So I recommend using AirDNA. That's an online, like kind of platform. You pay for it, right? Like to estimate the gross revenue potential of short-term rentals. However, if you are only relying on AirDNA or other online tools to figure out the Airbnb earning potential, there's a good chance you will purchase a property that will not cash flow. It gets a little, like kind of complex, right?
Yeah.
And for our clients, like we leverage our nationwide short-term rental operator network in every market we are looking to invest, to get a better understanding of the property level revenue data for short-term rentals. I mean, what we do, we talk to at least 3 local short-term rental operators to get the actual gross revenue numbers. And that's a huge, like kind of differentiator for us, right? It also helps us pinpoint, like the best sub-markets and properties within a market. You need to know where properties perform best in a particular market relative to the prices of homes. That's, like kind of pretty important, like kind of legwork you need to put in upfront, right? But in addition to that, we, like kind of identify the top investable markets by investment size. So let's say if you have, like kind of $200,000, right? We have a list for you. If you have, like kind of $300,000, right? Like we have a different, like kind of market list, right? So, but let's go back to what you can do on your own, right? Because like that's the purpose of this, like kind of podcast, right? Like we are trying to help people out. So, like on your own, if you want to, like kind of find a cash flowing STR, like I recommend using 3, like kind of basic principles to meet your cash flow and ROI goals with every investment property. First, like kind of focus on purchasing larger single family homes that are undervalued properties in a great location with views, because none of the amenities that you put into a property can make up for the views or the location. This way, every property that we purchase for our clients cash flow, and it cash flows significant amount of money, right? Second, avoid buying the, like a 2 or 3 bedroom short-term rental property. Why? It's not worth tying up your limited capital just to make $1,000 a month at best on a 3-bedroom home, just like everyone else, right? Mm-hmm. So third, like you should go all out on amenities, interior design, and differentiation, because that's how you stand out and increase the net income and dominate the competition. Because, like Airbnb became, like kind of competitive. Saturation is a real problem. And if you're not differentiating your property from the competition, any market, right, it's going to generate average revenues and it's going to be raised to the bottom. So did that kind of answer your question?
Yeah, no, definitely did. Definitely did. So what are some of the challenges with purchasing an STR and leveraging the tax loophole? What are people running into? Where are the roadblocks, if there are any? I mean,
yeah, there are.
There must be some challenges.
Yeah. So based on my experience, like most of the investors do not have the expertise to analyze markets and deals properly, right? They're not looking in enough markets or the right markets. They also do not know how to underwrite a property properly. What happens is that they overpay for a property, and after they buy it, they realize it doesn't cash flow. And unfortunately, they don't know how to buy a short-term rental the right way, right? And honestly, finding the, like the highest profitable STR and then buying it the right way and leveraging, like an advanced tax strategies are not, like kind of straightforward issues. And there are often huge amount of money at stake, right? And it really requires, like the help of a team, right? Like a real estate CPA, right? And a short-term rental, you're like an investment, like an expert. And that's actually, like we, like solve these fundamental problems for our clients, right? And we mitigate the risk associated with buying and launching a, like a short-term rental property.
Oh, so you guys are providing the expertise. So that probably also answers my next question too, because people are probably hesitant about what regulations changing and the seasonality of STRs and things like that. So how do you address the concerns to make them feel confident in their purchase? How are you helping them? You must be doing this stuff.
Yeah, absolutely. I mean, we have a dedicated person, like literally talk to, like the counties, right? Like, but
yeah.
First of all, like we do extensive due diligence before investing in any market, right? Like, I mean, we have, like the Department of Planning contacts for every city that, we are looking to invest in. Once, we find a property, like the first thing, we do is to, verify the address with, the city Department of Planning to make sure it can be rented less than 7 nights on Airbnb. I mean, there are some, people, actually sophisticated, people, doctors, tech executives, they are, using ChatGPT. No.
Yeah.
You cannot Google it. You have to pick up the phone. You have to call, the city Department of Planning and ask them, specific questions. See, if for what's the zoning rules, and if you can actually, legally, Airbnb a property, right?
Yeah,
That's what we do for our clients, right? Because we regularly hear stories of investors who buy a property. Later, they are hit with, the news that the city shut down, short-term rentals. In an instant, your short-term rental business is shut down. And you got a big liability on your hands. And, what I'm saying is you must do your research and ensure you comply with all local laws before purchasing a property. What we do, we tend to stay away from homes with HOAs. Because we never, Chris, we've been doing this, 3+ years. We never purchased a condo, or a single family home with a, a HOA. Because homeowner association rules could change anytime and they can ban short-term rentals, if they want to. That's the reality. We mastered, the Airbnb seasonality in all markets we invest in for, bigger profits year round. What I mean by that, local market demand, patterns with, our clients before, we present the property, right? But we also teach them how to implement, dynamic pricing based on seasonality. It's just like, a hotel, running the, a business, right? Revenue management, how to offer targeted promotions during, off-peak season and how to highlight, seasonal attractions in your listing. Essentially, we equip our clients with all the skills and knowledge that they need to be successful and maximize profits from short-term rentals.
So how can I benefit by working with specialized real estate CPAs and short-term rental experts rather than just trying to do it alone? I know you have both of those people on your staff at your company, right? So
yeah, we do. So I mean, I don't enjoy saying this, but newbie investors, I don't care if it's a surgeon or, a Silicon Valley executive, and I'm not trying to be arrogant, but they do not understand the importance of cash flowing properties, or actually the importance of cash flow, in business, right? Cash flow from your portfolio will give you the freedom to live the life you want to live on your terms, not the tax benefits. Let me be very clear about that, right? And based on my experience, most of the investors also do not have the, the expertise to analyze the markets and deals properly. Like I said, they're not looking in, enough markets or the right markets. So they are, buying a property that, wouldn't cash flow, right? So find, the highest profitable STR and then buying it the right way, leveraging, advanced tax strategies are not straightforward issues, right? So it will require, help of a team, a real estate CPA and a short-term rental, an investment expert. So we, solve that problems for our clients, right? Not only helping you save 5 or 6 figures in taxes, but also, mitigating the risk associated with buying a short-term rental. And by leveraging our expertise, to buy a STR property and working with a tax, strategies, you are able to own a cash flowing short-term rental, which appreciates in value and lower your taxable income by, hundreds of $1,000s, right? Depending on your income levels. I mean, and we also teach you how to expand your earning potential by strategically accumulating additional properties every year and build wealth. Our service, is not for everyone, right? So it's for, the high income tech professionals who wants to buy his or her first short-term rental or scale a short-term rental portfolio while maximizing tax benefits. And it will require a higher amount of starting capital. And we typically, tell our customers, at least, you would need to have $200,000, to work with us, maybe a little more than that, because there's certain costs associated with buying an Airbnb. You need to have money for the down payment of a, property, right? And you have to furnish the property, right? And also you need to add the amenities. So it's not like you have 100K, let's talk about this and then invest in short-term rentals. That's not the case, right?
Yeah.
So it requires a little bit more than that. But if you are a high income earner or a high net worth individual and looking to deploy capital in real estate, you should definitely reach out to us. Actually, we have our landing page. We're gonna share, with our, podcast, and that's for your, audience. I would like to ask them, fill out the form, give us, the information, let us know, you're a friend of Chris, right? And we'll make sure we talk to you. And if we cannot help, we can definitely, connect you with, the right folks. It could be a, a real estate CPA, or it could be, our team. But happy to help, any way we can.
It sounds amazing, especially for people that already have short-term rentals that are already doing Airbnbs. And I'm sure there's probably a lot of people out there that are already doing them. They don't even know they can take advantage of this loophole, probably, and they're already in the space. So, yeah. Wow.